Welcome to this course on options trading. Very excited to finally be releasing this. This is long overdue, and I'm going to be doing my very best to answer the questions: what are options and how do I make money with them? Options are an incredibly powerful tool for growing your portfolio, especially for smaller accounts. If you've read any personal finance books, the standard advice is to buy index funds and let it compound at 8% a year or whatever it does. And that's fine. If you have a few $100,000 already to put into the markets, that's great. But you've got to get to that point. And for people with small accounts, say 10,000, 20,000, even 40,000, it's a slow process that can take decades to get to a sizable amount, especially if you're not in a position to save a lot of money every month. Therefore, what we need to do is be more aggressive in our technique and risk to generate higher returns. Now, you may be worried that we're going to be gambling, or now you have to become a trader and stare at charts all day. I can assure you that's not the case. We're not going to be doing candlestick patterns and sniping intraday levels here. This is about following the broader trend, buying time on our trades, and letting the day's action play out. And look, we don't have to do astronomical numbers here. There's no reason to place hero or zero trades. Options are a skill game, and a structured trading system is the key to consistent performance. I've been trading the system that we're going to learn for about 5 years now, and I've produced anywhere from 50 to 180% yearly returns. Think about how fast your account grows at 100% returns a year. If you start now with $10,000, at the end of 5 years, you would have 300 grand. Now, I'm not saying this is going to be easy. Commitment to the process and strong analytical thinking is needed to be successful at this. But if you study the information in this course and you show up every day and watch the alerts, understand the trades and the process that's being executed, achieving a 100% return is very doable. So, we have some serious but exciting work to do. Let's begin. The first section is going to be all about the fundamentals of options and how they work. We're going to be discussing what options are, what factors determine their price, and the option Greeks. I will also be introducing you to Thinkorswim, and we will be looking at option graphs inside of the trading platform. So, first, we're going to have a PowerPoint presentation with all the important points that you absolutely have to know. And then we're going to go look at the same information represented visually inside of the Thinkorswim platform. The next section will be on spreads, which is going to be our bread and butter trades. The third section will be the advanced spreads. Section 4, we will be discussing some basic chart reading and technical analysis. This is important because we don't just want to slap random trades on. We want to set our trades up for success and try to select the right stocks. Now, there are hundreds of different chart reading techniques that people use, different indicators. Everyone does it a little bit differently, and you can end up watching hours and hours of content on this. I personally am not a super technical trader. I do some basic things, and it's worked well enough for me. So, I'm not going to go over candlestick patterns, RSI, MACD, all the popular ones. I'm just going to show you what I do personally to select stocks, and I'll also show you what I do on an intraday level when executing trades. Section 5 is very important. It's the secret sauce, if you will. Um, Look, anyone can go on YouTube, type in what is a call option, what is a debit spread, and you can figure it out. But if a stock moves against your position, what now? This isn't something that you'll find discussed a whole lot on YouTube because, frankly, it's not a popular way to trade. It's a bit uncomfortable. If you're in a deep loss, most people will tell you to just cut the trade and move on. But It's my belief that you should fight for losing trades. Our goal with adjusting is to bring losing trades back to break even, or if we can, into a profit. Minimizing losses is a big part of the reason why this system is successful and produces the returns it does. So, my adjusting philosophy is going to be discussed at length here. And the best way to really teach this is to do some live trading. So, I'm going to place a bunch of random trades with no thought at all, and we're going to let them run. Some of them will win, some of them will lose, and we'll execute different adjustments along the way. This is where the rubber meets the road, so to speak, and we'll need to do a bit of problem solving here. Trading landscape, there are different types of trading that we can do. I've outlined here the characteristics of each style of trading. In general, the lower the time frame you're trading on, the more difficult your life becomes. So, day trading is where you're in and out of a position in the same day. Sometimes you're only holding on to positions for 10 or 15 minutes. The reason it's so difficult is because there's no room for error. It's very binary. You have to be right immediately or you lose. This style of trading utilizes heavy chart reading and technical analysis tools. And like I said, we'll cover some basic technical analysis, but it's not really the focus of this course. We are going to be operating in the swing trading zone. This, I believe, is really the sweet spot for most people, and it's what I prefer to do. It works really well for people that have day jobs and can't watch the market all day. Swing trading is where you hold positions anywhere from a few days to a few weeks, and you manage the positions on a day to day basis. Unlike day trading, where the focus is on technical analysis, swing trading is more about position management because the time frame for our trade is longer. It's okay to not get the perfect entries and exits. The skill here is more about adjustment points and technique and not really chart reading so much. So, what this means is that swing trading is really ideal for people who can't or just don't want to stare at the charts all day. And lastly, we have investing. Everybody knows what this is. You buy some stocks, and hopefully, upon retirement, you've picked the right ones. So, stocks versus options. What's the difference? A stock is fractional ownership in a company. It's also referred to as equity, and the returns are 1 to 1, meaning if a stock goes up by 5%, your return will also be 5%. Options, on the other hand, are different. They are a type of financial product called a derivative. They offer no ownership in the underlying company, there's no dividends, no voting rights, and eventually they expire. They are simply a leverage tool. Okay, so what's so special about that? One of the reasons options are so powerful is that they are actually just a mathematical concept. An equation predetermines all of their behavior and allows them to be graphed and modeled inside of an options trading platform. Not only can we simulate our positions, but also apply different analytical scenarios and manipulate them to create profits in different ways. So, our success with options is going to be determined by how well we can plan ahead to attack, defend, or take neutral positions in the market. And the last point I want to make is that one option contract controls 100 shares of the underlying stock. So we're paying a smaller amount of money to control a larger amount. That's where the leverage is. So now let's take a look at an example trade that I made back in 2020 that illustrates the difference between options and stocks. So the trade was on GLD, which is an ETF that tracks the price of gold. On July 1st, the GLD was trading at 167. Now, if we wanted to buy 100 shares of the GLD, it would cost us $16,700. On the other hand, GLD has an option to buy the GLD at 172 in 45 days, and it cost $221. So, this is essentially a bet that GLD will pass 172 in the next 45 days. On July 28th, GLD was trading at 182. The stock is now worth $18,200. We have a $1,500 profit, which is a 9% ROI. And that's a successful trade. It's not bad. For about a month, 9%, that's pretty good. The option, on the other hand, was worth $1,095. The profit was 874 and the ROI was 395%. Just two of these option contracts costing a grand total of $442, and you've made more money than had you put up the $16,700 to buy the stock. So, to wrap up this stocks versus options discussion, with stocks, you are looking to buy low and make money as they go up. That's about it. They're great for long term bets. If you're bullish on a company in the next 4 years, you would not buy an option. You would just buy the stock and not think about it. With options, as you saw from the previous example, we can be much more capital efficient with our money. This is ideal, especially when we're working with smaller accounts, and they're explosive as well. You don't need a ton of money to make money with them. Options also have the unique ability to make money in any market direction, and we're going to take a look at this in depth in the course. So, no matter what the market environment is, there is a way to profit off of it using options. The last thing I'll point out is that options are a great hedging tool for your overall portfolio. For example, if you've got 200K sitting in your retirement account and you think the markets are about to sell off, you can actually buy some options that will profit when the markets go down, offsetting the losses from your main account. So that's actually a very popular way that options are used besides trading. So, okay, that wraps up this introduction video. Next, we are going to break down what is an option.